Ladies and gentlemen, good day and welcome to the Q3 FY23 earnings conference call of Lumax Auto Technologies Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantee of future performance of the company, and it may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. Now I hand over the conference to Mr. Anmol Jain, Managing Director of Lumax Auto Technologies Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. A very warm welcome to our Q3 and 9-month FY23 earnings conference call. Along with me on this call, I have Mr. Deepak Jain, Director, Mr. Sanjay Mehta, Director and Group CFO, Mr. Vikas Marwa, CEO, Mr. Naval Khanna, Executive Director, LMS, Mr. Ashish Dubey, CFO, Mr. Ankit Thakral from the Corporate Finance team, Ms. Priyanka Sharma, Head Corporate Communications, and SGA, our Investor Relations Advisor. The results and presentations have been uploaded on the stock exchange and the company's website. I hope everybody has had a chance to go through the same. I'll start by sharing some insights on the economy and industry. Then we'll go over the operational and financial performance for the third quarter of FY23 before opening the floor for question and answers. India is projected to be the fastest growing major economy in the world, with growth rates projected to be upwards of 6% for the coming years by IMF, indicating a strong resilience despite global headwinds. It continues to remain a bright spot in the global economy on the basis of support by export opportunities as a result of India's emergence as a manufacturing hub and the government's initiative to Make in India. On the industry front, past 2 years have been tough, and the road to recovery was not smooth, beginning with COVID-19, followed by supply chain issues, chip shortages, and the Russia-Ukraine war. However, amidst rising inflation and interest rates, the growth momentum has been solid. The domestic auto industry has recovered well in the last few quarters, and the semiconductor shortages are also going to abate in 2023. Despite all the challenges, the passenger vehicle segment achieved record sales of crossing 37.92 lakh units in calendar year 2022, which is about 4 lakhs higher than its previous peak in 2018. The FADA numbers for January 2023 also show a 22% growth in sales of passenger vehicles compared on a year-on-year basis. However, there is a shift towards premium models in the market, which was previously known for small affordable cars. After struggling for the better part of the year, the two-wheeler market has also begun to experience some signs of buoyancy. The January figures show a 10% growth year-on-year. As per the Economic Survey 2022-23 tabled in the Parliament, the wages at rural level are expected to rise and inflation will be softening going ahead. This should help the rise in sales of two-wheelers. Three-wheeler sales are up by a good 60% year-on-year, and commercial vehicle sales are up by 16% year-on-year for the month of January. The adoption of electric vehicles, which had already begun to take root by 2022, particularly in the segment of two-wheelers, will accelerate in 2023 and continue to do so in the years that follow. We are continuously modernizing our products to accommodate the changing dynamics of the industry, and we continue our significant investments in research and development in order to develop products with a focus on the future. In the Union Budget, Honorable Finance Minister had announced an extension on customs duty exemption for the import of goods and machinery required to produce lithium-ion cells for electric vehicle batteries. This will increase local production and manufacturing of lithium-ion batteries, thereby preserving the affordability of electric vehicles. Since automakers are importing a large number of electric vehicles to the country, this action was vitally important. This would help them launch more electric vehicles with high local content. The changes proposed by the Finance Ministry will have a considerable impact on the prices of automobiles, two-wheelers, and fuel throughout the country. With the introduction of new models, more electric vehicles, and other cutting-edge technologies, coupled with more income in the hands of people as a result of lower direct taxes, the automotive industry should continue to expand at a steady state. Let me now move on to the operational highlights for this quarter. During the quarter, we have made the following new launches: the gear shifter system and the antenna feeder cable assembly for Toyota Hi-Cross and the gear shifter for Maruti Eco in the passenger vehicle segment, along with Force Motors Urbania in the commercial vehicle segment. In the two-wheeler segment, we have been able to add plastic products for Pulsar P150 model. With continuous new launches by the OEM, we have also been able to grab new business and build a robust order book. Our content per vehicle and per OEM has been increasing due to our presence across multiple product categories and long-standing relationship with all the major OEMs in India. Speaking of entity-wise, the standalone entity caters to integrated plastic modules, aftermarket business, chassis and swing arms for two-wheelers, trailing arm for three-wheelers under the metallic business, and two-wheeler lighting. The standalone entity has contributed 71% of the total consolidated revenues for 9 months FY23. Lumax Mano Allied Technologies, the 55% subsidiary, which manufactures manual, AMT and automatic gear shifter systems and has the market leadership position, contributed 16% to total consolidated revenue. Exports business of automatic gear shifters for a global platform is on track and is performing well. We are also working in tandem with the JV partner to increase our reach to newer markets. Lumax Cornaglia Auto Technologies, the 50% subsidiary, manufacturing air intake system and urea tank, commanding 100% share of business with Volkswagen and Tata Motors, contributed 7% to the consolidated revenue. This joint venture holds a strong order book and we are very bullish for its future growth. Lumax Metallics Private Limited, the 100% subsidiary manufacturing seat frame, contributed 4% to the total consolidated revenues. The company's application of merger with Lumax Auto Technologies Limited has been approved by the Honorable NCLT. The order of the same is awaited. Lumax Alpine India Private Limited, a 50% subsidiary for the manufacturing and sale of electric devices and components, including software related to the automotive industry, has contributed 2% to the consolidated revenues. We have aggressive targets for this joint venture. Now I would like to hand it over to Mr. Sanjay Mehta, Director and Group CFO, to update you on the operational and financial performance of the company.
Good afternoon, everyone. I will brief on the operational and the financial performance. For 9 months FY23, integrated plastic modules contributed 24% of overall revenue, followed by aftermarket at 20%, gear shifter at 16%, fabrication at 14%, lighting products at 8%, emission at 7%, and others at 11%. Two and three wheelers contributed 38% to overall revenue, passenger car at 25%, aftermarket at 20%, CVs at 9%, and others at 8%. For more detailed operational highlights, one can refer our investor presentation uploaded on exchanges and company's website. With respect to financial highlights, the consolidated revenue stood at rupees 445 crores for Q3 FY23 as against 424 crores last year, up by 4%. For 9 months FY23, consolidated revenue were up by 24% at rupees 1354 crores. EBITDA margin stand at 12.2% for quarter 3 FY23 as against 11.2% for quarter 22, up by 100 bips, whereas for 9 month EBITDA margin is at 12%, up by 150 bips points from 9 months last year. PAT after minority interest for the quarter stood at rupees 23 crores as compared to 21 crores in Q3 FY22, a growth of 8%. PAT for 9 month 23 stood at 74 crores, up by 53% from 9 month FY22. PAT margin is at 5.2% and 5.5% for Q3 and 9 months respectively. The capex incurred during 9 months is 40 crores. With this, we open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek from Dolat Capital. Please go ahead.
Good afternoon, sir, and congrats for decent set of number in a challenging quarter. Sir, there is an increase in revenue from the lighting business quarter-on-quarter basis, despite fall in the Bajaj Auto volumes. So, have you won any new business?
So, when you say quarter-on-quarter, you're talking about consecutive quarters, or you're talking about on a year-on-year basis?
It's quarter-on-quarter basis, consecutive quarters.
Yeah, so it's pretty much flat. Quarter-on-quarter is only 6%. So there have been certain new models, but again, since Bajaj's overall volumes are down, we've taken an impact of that as well. So lighting again is pretty defined. It's only for Bajaj Auto, and we continue to maintain our wallet share within Bajaj Auto.
Okay. And that is continue on a strong footing. Quarterly run rate is now 98 crores. So will this run rate is sustainable in FY24?
Absolutely. I think I have always maintained, and since the last 12 to 15 months, that after market, our endeavor is to double the revenue in a period of about 3 to 4 years, and hence you see these strong growth rates, and we are pretty confident that this growth would continue in the coming year as well.
And in aftermarket business, how much is the network expansion in last 1 year?
So we have done about close to 15% new channel partners expansion across the length and breadth of the country. So, and we will continue to do so as and when we feel necessary to expand our reach for the end consumer.
Sir, in plastic molded part, there is a sharp degrowth in the revenue. Is it because of the degrowth in the Honda two-wheelers volume?
So the plastic module degrowth is on account of Bajaj Auto as well as HMSI. As you know, the two-wheeler specifically in Q3 was slightly struggling, and that's the result of the downfall in production for both HMSI and Bajaj Auto. These are the two primary customers which cater under the plastic module business.
And the plastic molded, how is the correct mix in two-wheelers versus four-wheeler, and how do you shift in the coming quarters because of new business win from the four-wheeler OEM?
So right now the mix would be almost close to 90% of the revenue would come from two-wheelers, largely driven by Bajaj and then HMSI, and about 10% of the revenue pie of plastic would be coming in four-wheeler. These are certain products of kinematics which the company had secured orders for recently from as a tier 2 for Kia and Hyundai, as well as direct for Maruti Suzuki. But I think strategically, as I've always mentioned, the endeavor is to grow the passenger car side of the plastics business in the forthcoming years.
And what is the quantum of these new orders in the four-wheelers side?
So the total, you're talking about the new orders with respect to company as a whole, or only with respect to plastic?
Respect to plastic.
So we have right now close to about 50 crores, 40 to 50 crore rupees of new order book of plastic per se, which is there.
Okay. And in the sheet metal business, sir, you have seen impressive growth in last 2 years. But however, now metal prices are cooling off. So how do you see a positive or negative impact on your business in terms of the revenue and EBITDA?
So on the seat frame business?
The seat frame and chassis both.
Yeah, so I think majorly there the business is driven by the chassis business for Bajaj Auto. I think we saw a handsome growth. Right now, if I look at a 9 month, there is a slight degrowth, largely because of Bajaj Auto volumes. But I think strategically we are very well positioned. You know, the export frames is what has caused this slight degrowth, because we know the export volumes of Bajaj Auto have taken a beating based on the demand in the overseas markets. But I think we are very strategically well positioned. We are now in the KTM space, as well as in other premium space for the frames business. So going forward, we anticipate this business to continue to grow and also add to the margins.
Okay, sir. And sir,
I also mentioned earlier that we've also secured certain EV platform businesses for future models for the frame business.
Okay. And in air intake systems, sir, you are showing impressive growth. Is it because of the incremental revenue from the urea tank, or urea tank revenue will start to reflect from FY24 only?
So I think majorly it's because of Tata volumes going up. If you see Tata Motors, they have had a significant run, almost a 42% growth in their own volumes on a 9-month basis. So it's just a result of that, because we are very strong on our presence in Tata Motors with respect to the emission products.
So is it because of the exhaust system revenue or the urea tank revenues?
We don't do exhaust systems. We do air intake systems and we do the urea tanks. Both of them have increased based on the volumes of Tata Motors. And
how is the outlook for FY24 from this business?
Well, we are still bullish on all the joint ventures with respect to Lumax for Naglia per se. We are sitting also on an order book of about 20 to 25 crores.
Okay, sir. And my last question is regarding your capex plan for FY23 and 24.
So as you see, in the 9 months we've done a capex of about 40 crores. For the full year, we expect this capex to be roughly around 60 crores, give or take. This is slightly downward from the earlier guidance of around 75 to 80 crores, which I provided, largely because of certain models or certain launches, etc., getting deferred to next year. I do not have a next year capex plan yet, but I don't see any significant incremental expansion on any of the specific businesses. So it would probably be in a similar ballpark as this year.
Thanks. That's all from me.
Thank you.
Thank you. The next question is from the line of Dipti Kothari from Kothari Securities. Please go ahead.
Good afternoon, sir. So my first question was that what is our current order book?
So our current order book is roughly around 500 crores, which is different business lines. And again, out of the 500 crores, majority, almost more than 90% would be new business, and the remaining 7 to 10% would be a replacement business.
Okay, sir. And what is our current capacity utilization level?
Are you talking about any particular business? Because it hugely differs from one business to the other.
No, I was talking about on a blended basis.
So let's say give or take around 65-70% would be on an average. It would differ across businesses, but if I were to give you an overall, it would be close to 70%.
Okay, sir. And sir, what is your outlook for the EV business? And are we seeing any increase in demand for this category?
Well, EV, as I said in my opening remarks, will continue to grow, specifically in the two-wheeler industry. I mean, you know, the growth has been significant from a percentage basis, and I'm sure the penetration will go deeper. As I mentioned, we already have certain secured businesses for EV models of one of our OEMs for the metallic frame businesses.
Okay, sir. Thank you so much. That answers my question.
Thank you.
The person you are speaking with has put your call on
The next question is from Nati Singh from Arihant Capital Markets. Please go ahead.
Yeah, thank you for the opportunity. So most of my question is already answered, but overall I want to know what the growth rate that we are targeting and what's your overview on the margin front going forward FY24 and Q4.
So if you see, the growth rate of 9 months is already at about 24% compared to last year, and I would assume that a similar growth rate, if all goes well in Q4, and as of now we don't see any signs why not, similar growth rate would be reported for the full year. I'm still very bullish about next year prospects, so we do expect a double-digit growth for next year as well. When it comes to our margins, I think currently the company is strong at a margin of over 12% at a EBITDA level, but I think we will continue to sustain that, and going forward our endeavor has always been to come towards the teen margins, close to 13%, and then further enhance going forward. So I think we are on track with the expansion of EBITDA margins as well.
Okay.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Apurva Mehta from AM Investments. Please go ahead.
Yes, sir. Congrats on decent numbers. Any specific reason why the quarter was muted compared to Q2? Any specific reason where we can throw some highlight on it?
Sure. I think one of the major reasons is Bajaj Auto. I think Bajaj Auto specifically in the quarter had a almost 18-20% decline in their volumes. Also, HMSI showed a close to 28% decline in their volumes. Also, if you look at Maruti Suzuki, also showed about a 17% decline in their volumes. So specific to the quarter, I think a majority of the OEMs, and as you know that these Maruti, HMSI as well as Bajaj Auto would contribute close to almost 40% of the business. So because their production volumes were down, Q3 particularly did not have a very strong buoyant growth. Part of it was offset with the aftermarket, which continued to at least grow on a sequential quarter-on-quarter basis, and on a year-on-year basis in Q3, it still grew almost double digits. So part of that was neutralized, but answering to your question, Apurvaji, I think majority of it was related to volumes down of OEMs.
And can we throw highlight on the JVs, where we are currently, what are the prospects of each JV next year? See, for example, Cornalia, Mano, which I think are doing pretty well. So what is your target for next year for Cornalia, Mano, and the few JVs which are not doing okay, means like Ituran, Job, Yoko, and Alps? All these JVs, can you throw some highlight of all of these JVs, where we see next year on the revenue front from all these JVs?
Sure. So I'll let Vikas expand more on that, but I will just give you an opening that on our order book of 500 crores, which we are sitting on, which is distributed across the different joint ventures, expect almost 50% of that revenue or that order book to come into the revenue in FY24 itself. So that is the kind of growth we are looking at from these new orders, but I will let Vikas also expand on the JVs.
So good afternoon, Purji, and in terms of the joint ventures, of course, the two mature joint ventures which have been there for quite some time, which is Lumax Mano and Lumax Cornalia, will continue their upward journey in terms of the order books and the new programs that get into production even in the coming year FY24. We are expecting both the joint ventures to be clocking between 15 to 20% growth rate, going ahead in FY24. Some very exciting news for us is that the new JVs, absolutely new JVs like Lumax Yokowo, Lumax Ituran, both of them get into prestigious SOPs starting from the month of April and 2024, which is where they start supplying to Honda cars in terms of Lumax Yokowo and to Daimler in terms of Lumax Citroën. These are very prestigious launches, and they have a capacity of high traction and high revenue. So FY24 is going to be there almost 1 full year of revenue. So we are anticipating definitely a very good percentage in terms of growth as far as these two JVs are concerned, and some decent volumes on both these joint ventures. Again, Lumax 5 continues to be a little bit muted because of the regulation for the second option sensor having shifted to 2025. But we are in advanced stages of discussion with one leading OEM and hoping to secure that business even on single heated sensor business also for their motorcycles. By June 2024, we should get into the SOP for that. So the revenues are expected to definitely double on Lumax 5 also. Then we come to Lumax York. Lumax York has secured some prestigious orders from Tata Motors, and we get into the SOP for that along with some new programs for Mahindra, looking for almost 30% jump in revenues for Lumax York next year, which then brings to the last one, Lumax Alps. The Lumax Alps business wins have been significant, but they are linked to the customer programs, and the customer programs are right now scheduled for FY25 launch. So pretty much the same kind of revenues what we see in FY23 for Lumax Alps will continue as much in FY24, because we are now sitting on a very secure, very healthy order book that kicks in FY25.
So can you throw some light on numbers of Alps, what kind of order book we are sitting in, and what kind of revenue we can see post 24 also?
So for Alps, already it is currently at a revenue size of 25-30 crore rupees per year basis, but we have already secured close to a 90 crore rupees order book, and as we speak, we are in the RFQs for another about 70 crores right now. And the traction is extremely good. It is getting into a regulatory products also, and Alps has got certain products where there is more or less only one or maximum two competitors in the areas of the products that it is in. So we have a high level of customer confidence there.
So this order will start reflecting on FY24, means FY25 kind of thing.
Yes. So out of the 90 crores order book that we have got for FY25 onwards, so in terms of a full year, there is almost 60 crores that will kick in. Prior to that, the customer is already evaluating with us other opportunities also, where we can be a running change or a second change to the existing suppliers. And if that comes in, then definitely the revenues could be higher.
And on the Citroën side, what kind of revenue we can expect on next year?
So good news, as we made the investors aware that there is one particular product, the telematics control unit that we intend to kick in with FY24. After that, there is another product that we have developed, and that is also now going to come into revenue. So we are expecting about 45 crore rupees additional revenue coming in for Lumax Citroën, which is going to just get off the block, because currently we decided not to cater to the aftermarket channels, there being a very high technology product. So that's how the OEM business will run.
So broadly speaking, the next year what we look at around more than 20% kind of growth we can expect, because all these JVs will start kicking in and the revenue stream will start coming in. So can we expect that broadly we will go past 22 to 25% growth?
So Purvaji, this is Anmol again. I think we do not anticipate any reason why not. Definitely a double-digit growth will continue, and it is backed on three specific things. Number one, there is almost 250 crores of the order book which will get into the revenue stream next year. Number two, based on whatever conversations we've had with our top three customers, they are pretty optimistic about the next year recovery, even from Bajaj Auto's exports standpoint. And of course, number three is as you saw, the aftermarket growth will continue even in the next year, FY24. So considering all of those, yes, I would not say that this kind of numbers would be challenging to achieve in FY24, but we will have more clarity perhaps by the next investor call.
And on the margin front, that our endeavor to have 100 basis point of margin expansion, that is on track. Seeing next year, we should be at the teens levels from next year onwards.
Absolutely, I think that is the endeavor. I mean, right now we are already sitting at a 12.2 in Q3 of FY23, and I think it's sustainable. So definitely we are looking at another maybe 100 basis expansion going forward. Whether it happens in FY24 specifically or part of it comes in FY25, can't say, but clearly our goal is to achieve a 13% EBITDA or thereabout.
Okay. And any other JVs in pipeline related to EV or something which is really exciting, which you are looking forward, or any new products which you are trying to get into it and we are close to it, and any excitement which you can share with us?
Yes, the company is always engaged in opportunities for growth with respect to new technologies, new products, and new partnerships. As and when they fructify, we will surely make announcements.
And any acquisition where we were looking around a few of them and it didn't anything on cards?
The company is always looking at inorganic growth opportunities as well, and as and when they fructify, surely we will make announcements to the market.
Okay. Thank you, and we wish you all the best.
Thank you, Purviji.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Aditya Shah from PG Securities. Please go ahead.
Thank you, sir, for the opportunity. You have been mentioning about increasing focus on the PV front. So, if you could give any guidance on what kind of our revenue mix are we looking ahead 2 years down the line?
So clearly, I think number one, most of the recent joint ventures, whether it is the Lumax Alps joint venture or the Lumax York or the Lumax Yokobo, they continue to be dominating in the passenger vehicle space. And of course, the two mature joint ventures, Lumax Mano and Lumax Cornalia, are also predominantly in the passenger car space. So with the order book, we do expect a significant contribution from the joint ventures in the coming quarters, and that's how we are planning to expand our presence in the four-wheeler space. I think I have always mentioned, if you see, for 9 months now we are at almost 25% of our consolidated revenues coming from passenger car space, which in 12 months 21-22 was at 20%. So there has been an incremental increase, but our long-term strategy is to get 1/3 of the revenues from passenger cars, 1/3 from 2- and 3-wheelers, and the remaining between aftermarket and commercial vehicles.
Okay, thank you.
Thank you. The next question is from the line of Samir Chadha from Chadha Securities. Please go ahead.
Hi, sir. Thank you for this opportunity, firstly. I have 2 questions. What is the outlook for the two-wheeler segment? And, the two-wheeler segment has been lagging in terms of growth due to various factors. So given that majority of our revenues come from this segment, it has clearly affected us. So how are we planning on mitigating this risk?
So there are 2 things which we are trying to do as a company. You're right. I mean, if I look at the two-wheeler as a segment, on a 9-month current year basis, we are up as an industry 13% on a year-on-year basis. However, Q3 was down, and again, if I look at a much more long-term perspective, we are still almost 20% down from the peak volumes of FY18-19. However, if I were to dissect that further, I would say that within the two-wheelers, the 4 key customers in the industry, there is Bajaj, HMSI, Hero, and TVS. Bajaj and HMSI are our current customers, and I think both of them are positioned quite strongly to overcome the two-wheeler headwinds in the market. Bajaj is largely export dependent. I do feel that in FY24 there will be certain corrections in the export demand, and we are very strong on the export models as well. So that's how I see a slight uptick on the two-wheeler for Bajaj. Also in the domestic industry, please note that Bajaj is mostly dominant in the premium segment, and the company has presence across the premium models as well, whether it is for the metallic business or the plastic business. So Bajaj should be reasonably doing okay in FY24. In terms of the overall strategy, as I mentioned, most of the future growth across joint ventures and the order book is largely catered towards the passenger car segment. So the objective is to continue to de-risk our dependability on two-wheeler, which is definitely more vulnerable compared to passenger car space. And I think passenger car will continue to lead the growth for the industry over the next 2 years. So on a strategic level, we continue to grow the passenger car products and businesses much faster. And of course, from two-wheeler, we want to continue to protect any further slide, which through Bajaj's incremental volumes in FY24, we should be able to arrest.
All right, sir. Thank you so much. I wish you all the best.
Thank you.
Thank you. The next question is from the line of Riya Verma from NR Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So I have two questions.
Sorry to interrupt you, Ms. Verma, but your voice is not audible, ma'am. Can you please speak a bit louder?
Is it audible now?
Yes, please go ahead.
Yeah, so my first question is on the integrated plastic module. We saw good growth in Q2 over Q1 FY23, but the number has come down again. So could you please throw some light on that?
You're talking about Q1 of FY23?
Yeah.
Well, if I look at Q1, I'm not sure what the number in Q1 was, but if I look at Q2 to Q3, there definitely is a downfall of 20%. And as I had mentioned before, the plastic module business is largely dependent on the two-wheeler segment, which is driven by Bajaj and HMSI. And if you look at both these customers' volumes, it has shown a downfall with respect to the Q3 per se.
Right. And what is the contribution of the two-wheeler and four-wheelers out of the total plastic integrated module?
So 90% is coming from two-wheelers and almost just about 10% is coming from the four-wheeler in the plastic module space.
Okay. Thank you. That is helpful.
Thank you.
Thank you. Reminder to the participants, to ask a question, you may press star and 1. The next question is from the line of Apurva Mehta from AM Investments. Please go ahead.
So just a clarification that we told that we would end with a 24% growth over last year. So we should, in Q4, we should clock around more than 500 crores. Is it right assumption?
So I said that 24% is the growth which we've already envisaged in 9 months. And yeah. I think I would still say that, I mean, I'm not sure 24, but yeah, we should be between 20 to 24% for the full year. So Q4, yeah, I mean, whatever numbers you mentioned, that seems to be what we should be doing in Q4 as well. I mean, anywhere between 450 to 475 crores of revenues is what I would expect to clock in Q4.
Okay, thanks. Yeah.
Thank you.
Thank you. Before we take the next participant, reminder to everyone or anyone who wishes to ask a question may press star and 1. The next question is from the line of Devendra Pandey from DP Financial Advisory Services. Please go ahead. Mr. Pandey, please go ahead with your question. Your line is unmuted.
Hello.
Yes, you're audible. Please go ahead.
Yeah, thank you, sir. Good afternoon. Sir, my question is on guidance. So can you please provide the CapEx guidance for the upcoming quarters, and what percentage of it would be the maintenance CapEx versus the actual CapEx?
So the 9 months actual CapEx is at 40 crores. I mentioned earlier the full year guidance earlier was around 75 to 80 crores. We would be pruning it down maybe to about 60 crores. So there is almost give or take 20 crores in Q4. Most of this 60 crores would be towards new products and expansions in line to deliver the new order book, and only very small part of it would be towards maintenance CapEx.
Got it. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Naitik Mohata from Sequent Investments. Please go ahead.
Good afternoon, and thank you for the opportunity. Just one question from my side. Could you give a guidance on what the JVs have clocked in 9 months as revenue, and where do we see them ending in FY23?
So the revenues of JVs in 9 months is at about 25% to the total consolidated revenues. Going forward, I think earlier I had given a guidance that about 1/3 of the total consolidated revenues would be from the JVs and subsidiaries, and about 2/3 would be from the standalone entity. And I think that is exactly the direction in which we are headed. As I mentioned before, that out of the 500 crores order book, significant part of it is towards the joint ventures and subsidiaries.
Yeah, I followed that, but I was just hoping if you could give some numbers regarding Manoa and Cornaglia in particular for 9 months.
So for 9 months, Mano did a 16% share, and Cornaglia did a 7% share, and followed by, as I mentioned, Lumax Alpine, which is at about 2% of the consolidated revenues. So this total put together is at about 25% of the consolidated revenues.
Okay, that's helpful. Thank you.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Well, I take this opportunity to thank everyone for joining the call. We will keep updating the investor community on a regular basis for any incremental updates on your company. I hope we have been able to address all your queries. For any further information, please get in touch with us or Strategic Growth Advisors, our investor relations advisors. Thank you once again.
Thank you. On behalf of Lumax Auto Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.